Hello, very good morning to all and welcome to today's Daily Dose of Market Insights. I'm Kelvin Wong here again. Very good morning. Today will be Tuesday, the 7th of July 2025. So before we jump straight into today's very interesting Daily Dose of Market Insights, let's have a quick look at the disclaimer first. All right. Leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product, as well as any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. All right, just to make sure that everything is working fine before we jump straight into the next slide. So I hope that you guys could hear me and listen my screen. All right, so let's have a quick recap of what has taken shape yesterday in terms of the intraday performance of the broad-based cross-asset classes, ranging from the major stock indices, the major US dollar pair, and as well as any interesting insights on gold XAU/USD and West Texas crude oil. So and as well as its related news flow in terms of economic data release, and as well as important we call it relevant news flow that drive the intraday movement yesterday. And lastly, before we jump straight into the intraday technical outlook, where I will showcase the key intraday trend for today, and as well as the key levels to watch out for today. All right, so there's a very short-term intraday technical outlook, okay, on those broad-based cross-asset classes. So let us kickstart with yesterday's important news flow first, and in terms and the relevant economic data release. So let's start with relevant economic data release. So yesterday we do have this important data release that drive the FX market, particularly the euro currency pair, on the euro dollar and the euro crosses. We see the euro rallied, being reinforced by Germany preliminary inflation rate figure for the month of December that actually rose slightly more than expected year on year. So on the headline number, it rose to 2.6% year on year, above market expectation of 2.4%, and also above the previous print that was in November at 2.2% over here. And if you look at the core inflation, they name it as harmonized inflation rate. So this is primarily the core inflation, that means excluding those volatile items like food and energy, also rose more than expected, 2.9% year on year versus 2.6% that was the consensus, and also above 2.4% that was previously printed in the month of November. So if you look at the core inflation trend in Germany over here, okay, so you look at the 3-year trend, okay, it starts to actually inch up higher as well. So that also causes the euro dollar to spike up. And do not forget, those who follow our daily dose since last week, we have been advocating a potential mean reversion rebound on the euro dollar. That means, i.e., some form of dollar strength setback story within its medium-term major uptrend. So overall, the major uptrend of dollar strength still remains intact, but on the intraday basis, there could be some signs of a dollar strength setback, which has been kind of reinforced by this news flow that support this mean reversion rebound in the euro dollar, and that has a spillover impact on the other dollar major pair currency as well, where you see the dollar weaken against other major currency pair. All right, so later, what are the key trend for today on the euro dollar and other major pair? Do stay tuned. I will cover much later during the intraday technical outlook segment. And also another news flow that causes the dollar to actually did that setback during the European session was from this BOJ Governor Yuda. So BOJ Governor Yuda made a public speech yesterday, the European session, where he actually promised to keep hiking rates. That means, i.e., keeping the normalization monetary policy stance intact in 2025 for Japan. That means, still recall, Japan is an outlier against the other major central bank last year, where other major central bank last year looked to actually kickstart their respective interest rate cut cycle. But however, for Japan, we know that there have been 20 years of very low interest rate, even sometimes negative interest rate, which is pretty much bad for the Japanese economy. And last year, due to various promising external factor, inflation, we call it stabilization, started to take shape in Japan with the focus on rising wages as well. So that actually prompted the Bank of Japan to kickstart its normalization interest rate policy. That means, i.e., gradually back from negative interest rate to a slowly positive territory. All right. So what he did say over here is that he did also focus a bit of the risk that is involved. So as usual, he will say that he must look at the various risks in deciding rate hiking timing. That means, i.e., will that be a potential risk-off event, primarily triggered by Trump's much more hawkish trade tariffs policy against the other major trading partner with US. So, but that also causes the dollar. But however, based on this particular speech over here, that causes the dollar to actually set back during the European session. All right, and another potential, we call it a news driver that caused the dollar strength to do that setback that we actually expected earlier since the start of last week, was also there's this particular news flow from Washington Post stating that Trump, we call it advisor, are considering a more narrow tariff plan, universal tariff plan. That means it will impact all the countries, but with a lower magnitude of tariff. But however, Donald Trump, using his social, we call it his social media post under he's saying that the story in Washington Post, quoting so-called anonymous sources which don't exist, incorrectly states that my tariff policy will be pared back. All right, in his Truth social media post on Monday. That means he's saying that he will still be firm on his so-called higher tariff plan, higher tariffs rate targeting various major trading partners with US. Example, that one on the very high tariff of 60% against China. So net overall, what we could see over here is that the dollar actually, this was previously see that dollar strength setback. Then after Donald Trump denied that Washington Post of that paring back of his so-called universal trade tariff plan with a lower magnitude of tariff rate targeting all countries, the dollar actually strengthened. All right, in the later part of the U.S. session, where the dollar yen rallied the most, almost erasing BOJ Yuda speech earlier on. All right, so later I'll touch on the dollar technical outlook again. Still bearing in mind that in my own opinion, based on a technical analysis perspective, the medium-term uptrend of the US dollar index still remains intact. That means dollar strength is still remain intact. Whatever rebound that we see on the euro dollar, on the sterling dollar, on the Aussie dollar, all these are just mean reversion rebound. All right. Okay, and so another news that is supporting this dollar strength setback was this resignation from the incumbent Prime Minister Trudeau in Canada. He actually resigned after 9 years after his own party forced him out. So that also causes the Canada dollar to strengthen against the dollar and against other crosses. And those who follow our day, those yesterday, I do highlight that prior to this official news, there was actually a bullish potential intraday setup on the CAD yen. So the CAD yen actually rallied within our expectation and hit those short-term resistance level. Then later I'll share with you again what are the key levels to watch out for the CAD yen and the current intraday trend on the Canada dollar versus the yen when I covered in the intraday technical outlook segment. All right, and another news flow on the highlight over here is so pertaining to this ongoing US-China trade war slash resource war, is that US actually kind of blacklist Tencent. All right, over here saying that it actually kind of affiliated to the Chinese military over here. So Tencent shares actually declined. Its ADR shares that's listed US declined yesterday, and because we know that Tencent is a major component stock within the Hang Seng Index and the Hang Seng Tech Index. So that actually explains why the Hang Seng actually is the worst performer Asia Pacific stock index in today's early Asia session. So we see the Hang Seng Index down negative 1.8% and the Hang Seng Tech Index down negative 2.14%. So that also came in within our expectation as well. So still recall that the Hang Seng Index or the Hong Kong 33 CFD index, which coin our platform, can't surpass our key short-term pivotal resistance, and later I'll share today even in fact now crashed through the first support level due to this reinforced by this negative news flow up from yesterday's this potential this blacklisting after US authorities claim that Tencent is related to the Chinese military. Right. So what you could see over here is that it seems to us that this US we call it US China, we call it tension, still remains within a frosty environment ahead of Trump official inauguration on the 20th of January over here. So that actually sum up the news flow, the key economic data that and its potential impact on the major cross asset pair. Yeah, before that, let me share with you the movement of the major stock indices. Yeah, so major stock indices rallied at the start because of that so-called Washington Post pairback trade tariff plan. Then thereafter, Trump denied it, and we see the S&P actually sold off and close near the intraday low, which represent intraday weakness. Yes, despite the fact that the Nasdaq 100 managed to outperform with a gain of almost 1%, driven by NVIDIA positive news flow after its CEO made a very positive speech in one of the we call it one of the we call it semiconductor conferences. But overall, the Nasdaq also managed to pare back its earlier intraday gain and almost close near the intraday session low. Very similar for the Dow Jones Industrial Average as well. Initially rallied after that so-called Washington Post report of that so-called rumored pairback trade tariffs from Trump, but after that Trump denied it, and we see the intraday gains almost wrap up. It closed near the intraday low at the end of the US session. All right, so with that, let us now kickstart the intraday technical outlook on those broad-based cross asset classes that we do on a daily basis with new key trend buyers and key levels to watch out for today. All right, so without further ado, let me expand my screen so that you guys, as usual, could focus more clearly on the chart. So let us kickstart with the major dollar pair first, starting with the euro dollar. So the euro dollar, as mentioned earlier, since late last week, Thursday, Friday, we have a bullish bias looking to play that mean reversion rebound. The mean reversion rebound took shape, smack on our resistance level at 1.0420. Also, the upper boundary of this medium-term descending channel that I drew from the high of 6th of December hit right exactly at the downward sloping 20-day moving average before shaping a pullback of the euro dollar strength. And what's interesting is that the hourly RSI hit a extreme overbought level and exit from an overbought level, and by breaking down by this steep key parallel trend line support, which indicate that the yesterday's upside intraday momentum has starts to dissipate. So with this negative momentum intraday movement as being depicted by the hourly RSI on the euro dollar, we will now flip to a intraday bearish bias back again, potentially looking for the impulsive downward sequence within its medium-term downtrend to potentially resume using 1.0460 as my short-term pivotal resistance level. Today's intraday support level to watch out will be 1.330. Only a break below 1.330 re-expose the last Friday minor swing low area that kickstart that mean reversion rebound, acting as the next near-term support level at 1.0250. Only a push-up with an hourly close above 1.0460 will invalidate today's intraday bearish bias on the euro dollar to see the extension of this mean reversion rebound, exposing the next intermediate resistance level at 1.0510, 1.0540, which also correspond to the downward sloping 50-day moving average. So, i.e., in a nutshell, given that yesterday's euro dollar has already met our mean reversion rebound resistance, there could be a probability that we are now at the tipping point of the euro dollar to resume its impulsive down move sequence within its medium-term downtrend, using 1.0460 as my short-term pivotal resistance level for today to flip to a intraday bearish bias on the euro dollar. All right, so now let us now focus on the next European currency, which is the sterling dollar. So the sterling dollar also rallied as expected, almost hit the resistance level at the 1.26 figure level, which coming very close to it. So we'll be looking at any opportunity to fade a potential push up strength on the sterling dollar to also flip to a intraday bearish bias using 1.26 figure level as my short-term pivotal resistance level for today. We also correspond to the upper limit of this medium-term descending channel that I drew from the high of 26th of September last year. So first intraday support level to watch out for today in today's intraday bearish trend. Today's intraday bearish bias. Today intraday trend bearish bias will be the 1.2460 near-term support level. Only a breakdown below 1.2460 re-exposes last Friday minus swing low 1.23550. Only an hourly push up above 1.26 figure level, which is so the downward sloping 20-day moving average. An hourly close above it will invalidate today's trend bearish bias on the sterling dollar to see the extension of this mean reversion rebound, exposing 1.2670 and 1.2720 next, which also correspond very closely to the downward sloping 50-day moving average. So i.e., in a nutshell, for today, we will flip back to a trend bearish bias on the sterling dollar using 1.26 figure level as my short-term pivotal resistance level. All right, so with that, let us now focus our attention to the dollar major pair in the Asia Pacific region, starting with the Aussie dollar. So the Aussie dollar also rallied as expected, hit the 20-day moving average, which is very close to our short-term pivotal resistance at the short-term resistance at the 16330 figure level. So we also use any opportunity to fade any strength right now on the Aussie dollar, given the fact that the hourly RSI has hit the overbought level, exit from the overbought level and stage a bearish breakdown below a key short-term parallel trend line support level that I drew on the screen right here or right now as being depicted by the dotted red line, which indicated that the short-term bullish upside momentum that was seen yesterday has dissipated on the Aussie dollar. So with that, I'll be using 16330 slash 16, no, I'll be using 0.6330, pardon me, 0.6350 as my short-term pivotal resistance zone on the Aussie dollar. So that also corresponds to the upper limit of this medium-term descending channel, this medium-term descending channel that I drew from the high of 30th of September. So for today, potentially yesterday's spike up will be the terminal end of this mean reversion rebound, as long as 6330, 6350 short-term pivotal resistance is not surpassed today. We will flip to a intraday trend bearish bias on the Aussie dollar. First near-term support zone to watch on the intraday basis for today will be 6180 slash 6160. Breakdown below 6160 exposes the next near-term support level, which is the Fibo extension cluster level. 6120 also correspond to the lower limit of that medium term descending channel that I showcased to you earlier from the September high of last year. Only an hourly close above 63.50 will invalidate today's intraday trend bearish bias to see the extension of this mean reversion rebound, exposing the next near-term resistance level at 63.80, followed by 64.30 next, which correspond to the downward sloping 50-day moving average. So i.e., to sum up, in a nutshell, yesterday bounce may already seen a terminal exhaustion point for the mean reversion rebound. So therefore, using 6330 slash 6350 as my short-term pivotal resistance, we'll flip back to a intraday trend bearish bias for today for the Aussie dollar. Now, lastly will be the dollar yen that we showcase our, we call it the last of our major dollar pair. So the dollar yen actually rallied exactly when we hit our first support level at 56.75, but hasn't surpassed above 58.80 yet. So without surpassing above 58.80, our first resistance upper limit zone, I do not want to tighten our key short-term pivotal support to be so tight at 57.75. I'll be still using 155.85 as my short-term pivotal support level, unless it have an hourly close above 58.85, then I will tighten it to 56.75. So still using 155.85 as my short-term pivotal support level, maintaining the intraday trend bullish bias on the dollar yen. Next resistance level to watch above 15880 will be 15945, followed by 16030 next. So 16030 next is rather key here. So 16030 is over here. All right, this previous congestion zone where previously it kickstart that nasty sell off where BOJ actually instructed the Ministry of Finance to actually intervene by selling dollar, buying Japanese yen. So this 160.30 level is very crucial, where short-term speculator will watch whether will BOJ instruct MOF to will MOF, pardon me, instruct BOJ to intervene in the FX market to push down the strength of the dollar against the Japanese yen, despite yesterday's Bank of Japan UDA rather hawkish speech that failed to derail the strength of the dollar against the Japanese yen. So this is kind of a 160.30 is a kind of a risk level to watch, okay, from the even on the short term basis. Only hourly close below 155.85 will invalidate today's intraday trend bullish bias on the dollar yen to expose the next near-term support level at 154.30, which correspond to the upward sloping 50-day moving average. A breakdown below it sees further weakness towards 153.30/152.70, which correspond to the 200-day moving average. All right, so before we go, let us take a look at the FX cross pair. So the FX cross pair that we featured yesterday was the CAD yen, which actually rallied and hit our first resistance level at 110.30, also driven by the fact of that resonation of the current Canada PM. So with that, the overall trend, intraday trend bias still remains on the bullish side of the story, as the CAD yen continues to oscillate within this minor ascending channel that I drew from the low of 9th of December. I have still some more room to go before hitting its upper limit, which correspond to the 0.674 extension, Fibo extension at 111.50. And the hourly RSI, yes, it hit the overbought level, but there is no bearish divergence because as price action continues to shape higher high in line with the price action of the raw price action of the hourly chart on the CAD yen. So with that, I will have a Titan key short-term pivotal support for today on the CAD yen using 109.10 level over here. So let me get down. So this will be the next, this will be no longer the short-term pivotal support that we have, because yesterday we showcased it at 108.60/40 as our short-term pivotal support. So given the fact that it has rallied, so and hit the first resistance, so this will be no longer a short-term pivotal support for today, and the short-term pivotal support will be tightened to 109.10. Okay, so 109.10 will be our short-term pivotal support for today on the CAD yen. Next resistance level to watch on the intraday basis for today, keeping into account of this ongoing potential intraday trend bullish bias, 110.90 followed by 111.50. Only hourly close below 109.10 will negate today's intraday trend bullish bias to see a corrective pullback, retesting 108.60/108.40. Only a breakdown below 108.40, which is correspond to the rising 20-day moving average and the lower boundary of this short-term minor ascending channel, that will only invalidate the intraday trend bullish bias to kickstart a corrective decline scenario, exposing the next near-term support at 107.50/1 followed by 106.80 next. So i.e. net still maintain that intraday trend bullish bias for the CAD yen using a Titan key short-term pivotal support at 109.10 for today. All right, so the next FX cross pair to watch out for will be the Euro Swiss. So the Euro Swiss now is coming close to the upper limit of this sideways range configuration that is in place since the high of 1st of November. So this is the hourly chart of the Euro Swiss, and you see the hourly RSI also has been banked off a parallel descending trend line over here. So using 94.40 as my short-term pivotal resistance, which is the upper limit of this short-term range configuration on the Euro Swiss, we would have a short-term trend bearish bias within its short-term range configuration. First near-term support level to watch will be at 93.55, 93.40 for today, which confluence also with the 50-day and the 20-day moving average. Only a breakdown below 93.40 sees a further potential setback to retest the lower limit of this sideways range at 92.90/93.10. Only an hourly close above 94.40 will invalidate today's intraday trend bearish bias within this short-term minor range configuration to see a push up to expose the next near-term resistance at 95 figure level psychologically, and also the minor swing high of 20th of September and 25th of September next, right? So that's for the Euro Swiss cross pair that I want to highlight new for today. Okay, so with that, that already covers the short-term intraday technical outlook on the FX market. So let us now turn our attention to the major stock indices, starting with the Hong Kong 33. So I mentioned earlier why the Hong Kong 33 underperformed today because of that negative news flow from US, where the US authority add Tencent into the blacklist pertaining to the alleged we call it alleged relationship with the Chinese military. So that causes the Hong Kong 33 to plunge because Tencent is one of its 5 major component stock inside the Hang Seng Index. So with that, it plunged now, hit our first support level at 19,337. That came in we are expected. So with that, I will have a tighten key short-term pivotal resistance for today using today's intraday high, which is at 19,670. Let me put it down here. Okay, so this will be no longer my short-term pivotal resistance for today. 19,670. All right. So 19,670. Okay, so let me remove this. Okay, good. Okay, so 19,670 will be my Titan short-term pivotal resistance for today on the Hong Kong 33, i.e. the Hang Seng Index. Still maintaining that intraday bearish bias. Next near-term support to watch after 19,337 will be 19,030. A breakdown below 19,030, which is the minor swing low of 22nd of November and 26th of November last year, exposes 18,460, which correspond to the key 200-day moving average as well. However, if price action managed to reverse up and have an hourly close above 19,670, today's intraday trend bearish bias will be invalidated to retest the range upper limit of in place that is in place since 27th of December last year at 20,150 next. All right, so that's for the Hong Kong 33, still maintaining that intraday trend bearish bias using a Titan key short-term pivotal resistance at 19,670 for today. Now, what's up for the Japan 225 or the Nikkei 225? So the Nikkei 225 managed to rally again and hit the upper limit of this sideways range configuration. All right, over here at 40,155/40,420. So if you look at it over here, it still continues to trade within this kind of range. Okay, that is in place since 27th of September last year. So with that, I will flip to a neutrality stance. So yesterday we were bearish over here. We were bearish over here, looking for it to come down towards 38,870, 38,730, but it did not fulfill our bearish bias and spike up instead. So since it's hovering at the upper limit of the range, with the RSI at the overbought level and some form of hourly bearish candlestick has been formed, we will flip to a intraday neutrality stance for today, given its choppy price movement. Okay, so this level here, so this was yesterday's rebound low. Okay, yesterday's low. Okay, so we will flip to a neutrality stance for today, neutral between 40,155/420 and 39,180. So only an hourly close above 40,420 will kind of validate this bullish breakout from the range to kickstart a impulsive upmove sequence on the Japan 225. So in first step on the intraday basis, the next near-term resistance to level to watch will be 41,145/41,350, which is the one-time Fibo extension from the low of 19th of December, and as well as graphically this minor congestion area over here from 5th of July and 15th of July last year. Right, so i.e. in a nutshell, flip to a neutrality stance for today on the Japan 225 between 40,155/40,420, and the lower limit will be 39,180 next. Okay, now turning our attention will be the German 30 or the German DAX. So the German DAX rarely expected and hit our short-term resistance zone at 20,105, 20,190, and if you do the Fibo retracement over here, you also hit close to the golden ratio as well. And given that the hourly RSI has started to exit from the overbought level, all right, over here, there could be a chance that of a decline today on the intraday basis for the German 30 or the German DAX over here. So using slightly higher of yesterday's intraday high of 20,290 will be 20,280 will be 20,360. So using 20,360 as my short-term pivotal resistance for today on the German 30, flip to a intraday bearish bias intraday trend bearish bias for the German 30. First near-term support level to watch will be 20,000, the psychological level, and as well as this minor former range resistance now turns into a pullback support, also confluence with the minor descending trend line that I drew from the low of 20th of December. Only an hourly breakdown with an hourly close, that means only a bearish breakdown with an hourly close below 20,000, will see a more pronounced intraday weakness on the German 30, exposing the next near-term support level at 19,840 and potentially even 19,690 next, which also correspond to the rising 50-day moving average. However, if we see a price push up and with hourly close above 20,360, that would invalidate today's intraday trend bearish bias to kickstart a continuation of this impulsive upmove sequence to expose the next near-term resistance at it's near its all-time high area at 20,460. Above it says 20,650, which also correspond to the upper limit of this major ascending channel upper boundary. All right, so that's the German 30 flipping to a intraday trend bearish bias using 20,360 as my short-term pivotal resistance level. Now, turning our attention will be the major US stock indices. So starting with the US Wall Street 30, US Wall Street 30 yesterday, we flipped to a trend bearish bias within its short-term range configuration, hit exactly as our lower limit of our short-term pivotal resistance level, which also correspond to the downward sloping 20-day moving average before shaping that negative bearish reaction of it. So still no change. 43,160, 43,350 short-term pivotal resistance zone, maintain that intraday trend bearish bias within its sideways range configuration. First near-term support level to watch, let me put it in writing, for today will be this 42,490 level. All right, 42,490 level over here. A breakdown below 42,490 level exposes the lower limit of this minor range configuration that is still in play since the low of 19th of December, coming to act as a next near-term support level at 42,210 next. Only an hourly push up and a close above 43,350 will invalidate today's intraday trend bearish bias to see a much more pronounced recovery on the US Wall Street 30, exposing the next near-term resistance level at 43,720, followed by 43,960 next over here. So i.e. in a nutshell, still remains that intraday bearish bias on the US Wall Street 30 using 43,160/43,335 as my short-term pivotal resistance for today. Now, turning our attention will be the Nasdaq 100. So the Nasdaq 100, yes, it was the strongest major US stock indices yesterday. Rallied, whipsaw around our short-term pivotal resistance level, but can't have a proper breakout below this minor descending channel upper boundary that I drew from the 18th of December high. And what we see over here is that the hourly RSI exited from the overbought level and staged a bearish breakdown below a key parallel minor trendline support, indicating that yesterday's upside momentum on the intraday basis may have dissipated. So with that, we will flip to a neutrality stance for today on the Nasdaq 100. So neutral between 21,730 and 21,350. Only an hourly close above 21,730 will continue to see that outlier move of the Nasdaq 100 to resume its outperformance and its intraday bullish bias, exposing the next near-term resistance at 21,890, followed by 22,130/22,160 next on the Nasdaq 100. So i.e., given that it can't have a proper bullish breakout above the minor upper limit of the minor descending channel, and as well as the bearish trend breakdown of the hourly RSI, we will flip to a neutrality stance for today on the Nasdaq 100 between 21,730 and the lower limit of the neutrality zone will be 21,350. Right, so that sum up the intraday technical outlook on the major stock indices. So now let us turn our attention to the commodities market, starting with gold XAU/USD. So gold XAU/USD has a continues to trend below the 50-day moving average, and as well as yesterday's short-term pivotal resistance zone at 2,664/2,674. So we'll be using this zone over here to maintain our intraday bearish bias within its potential so-called this kind of ascending minor triangle range configuration that could still potentially be in play, and the lower limit of this ascending triangle range configuration stands around the 2,600 level. So I will use yesterday's intraday low as my first support level. Okay, over here. Okay, let me put it in writing. 2,614. All right. Okay, so i.e. using 2,664, 2,674 short-term pivotal resistance level, maintain that intraday bearish bias within this minor ascending triangle range configuration. Short-term intraday support level to watch will be the lower limit of this minor ascending triangle range configuration at 2,614/2,600. However, if price action start to see a bullish breakout with hourly close above 2,674 today, that will invalidate today's intraday bearish bias to see gold XAU/USD floating up towards the upper limit of that minor ascending triangle range configuration. Next resistance level to watch 2,690. Above it says 2,716, 2,728. Okay, so that's for gold XAU/USD. Now, lastly will be the West Texas crude oil. So the West Texas crude oil staged that bearish reaction exactly off that short-term pivotal resistance, which is at 75.30, 75.80, and surpassed below our first support level at 73.90. So this will be our first resistance level to watch for today. So as usual, it didn't break down below 73 figure level. Yesterday it continued to shape that bearish divergence on the hourly RSI, and the hourly RSI hasn't hit that oversold level yet. So with that, we're still using 75.30, 75.80 as my short-term pivotal resistance level, which will correspond to the downward sloping 200-day moving average, maintaining the intraday bearish bias for West Texas crude oil. A breakdown below 73 figure level exposes the next near-term support level for today at 72, followed by 71.30 next, which pretty much correspond to the rising 20-day moving average as well. Only a hourly close above 75.80 will invalidate today's intraday bearish bias to see a further push up to test 76.70/77 figure level. We are so close to this gray line here. So this gray line is in fact on the hourly time frame will be the upper limit of this major descending triangle range configuration that is in place since 20th of March 2023. All right, so that sum up the intraday technical outlook on West Texas crude oil, still maintaining the intraday bearish bias using 75.30/75.80 as my short-term pivotal resistance for today. Now, with that, That also sum up the intraday technical outlook on those broad-based cross-asset classes. So before we go, let's have a quick look at the economic calendar. What are the key data to look out for today, Tuesday? So for today, Tuesday, we do have another key Eurozone member inflation rate flash data for the December will be France inflation rate. Flash inflation rate for December out at 3:45 p.m. Singapore time today. Then thereafter, we have the aggregate Eurozone one flash inflation rate for December, as well as a core inflation rate will be out at later at 6 p.m. Singapore time. So that could actually influence the movement on the euro dollar and the euro crosses, and as well potentially on the German 30 or the German DAX, we call it. And thereafter it will be a rather US session will be very important, will be the ISM services PMI, as we know that the services activities constitute close to two-thirds or contribute to two-thirds of annual GDP growth in the US. So something to watch out for that could also influence the movement of the dollar and as well as the movement on the major US stock indices out at 11 p.m. Singapore time today. All right, and thereafter will be a quiet US session. Yeah, so that actually sum up today's daily dose of market insights. I'm Kelvin here signing off, and I wish you all a great day ahead, and we shall speak again tomorrow. Thank you.